Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoy this video, don't forget to hit the like button, subscribe to our channel, or leave us a comment below. Let's get into it.
The gold price was on the move once again this week, with December COMEX futures briefly passing $2,800 per ounce, another new record. Many factors are influencing the metal right now, but arguably the most immediate is the US election. As voting day approaches, I've been asking a lot of questions about whether the outcome matters for gold, and the responses have been interesting. Overall, the consensus seems to be that while election-related turmoil may boost the yellow metal in the short term, larger forces are at play. One point I heard repeated many times is that neither Trump nor Harris seems concerned about the growing level of debt in the US, which is a huge driver for gold in the long term. Here's how Chris Blasi of Neptune Global explained it.
Up until about 8 years ago, maybe it was 10, you'd hear politicians talk about balancing the budget and getting the fiscal and financial house in order. No one even says it anymore. You'd look silly, right? Which is just that admission. Again, when I said gold is driven by the growth in debt and the creation of money, they won't even give lip service to it anymore because it seems so outlandish. And now it's just about the reality is debt will always grow and money will keep created. That's why inflation is with us. So, again, it just goes to, in my opinion, prove that those drivers that will continue to support the price of gold and continue to propel it are firmly in place. And there is absolutely, not only is there no political will, but it's really, we passed the point where it could even be done, right? The economy could not survive with balanced budgets and reducing and paying down debt.
Craig Hemke of tfmetalsreport.com made a similar comment, saying that no matter which party ends up in power, the debt situation makes it key to own gold. This is what he said.
And it doesn't matter who's president. It doesn't matter which party is in charge of either, side of the U.S. Congress. This is going to continue. And if we are, in fact, heading into a recession, which I have no doubt that we are, if it hasn't already begun, then your tax revenues are going to plummet. The spending is only going to increase, and that deficit and the total debt you're adding is going to widen out on an annual basis. So anyway, I have no idea who's going to win the election. But I think for people that are trying to plan for their financial security, to maintain their purchasing power, to see their way through this storm, it's whoever wins is still, you want to keep buying your gold and buying your silver.
Joe Cavatoni of the World Gold Council took a different approach to the question, saying that investors should look 6 months down the line to see the election's impact on gold.
Where they will have impact, or the election will have impact, is on how policies will develop. That tends to show itself up 6 months or so post an election outcome, when policies can be discussed, clarified, and potentially started to be implemented. And that's why we think that 6 months into the election outcome is when you're going to start to see more of an effect on the gold price from the outcome than the moment. There might be, with emotion that goes along with this election, there might be some increased levels of volatility. There may be some reaction and people looking to position around things. And we might even see that globally, in terms of some of the central bank behavior, some of the investors offshore who are looking at the U.S., looking at what's going to happen, how they're going to be, how they're going to be impacted by the fiscal challenges that the U.S. is facing. But overall, you're going to see time to tell, and exactly how that'll play out as a policy that'll lead to overall impact on the gold price.
With that said, the World Gold Council does make an interesting point in a recent report, noting that on average, U.S. gold bar and coin demand seems to increase during Democratic presidencies, possibly because buyers may be Republican-leaning. We're only a few days out from the U.S. election, so it won't be long before we see gold's immediate reaction. Leave a comment below to let me know how you think the precious metal will perform next week, and if you have someone you'd like me to interview about the election or another topic, please let me know that as well.
Thank you for watching. If you like this video, make sure to hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.